and gentlemen, shake my hand and welcome to another beautiful War Room, 365 Traders War Room. We are doing War Room number 77, making our way to 100 War Rooms sooner rather than later, probably towards the end of the year. What we do in these War Rooms is quite simple. I map out trading signals for you, normally swing trading signals, so I'm looking at the markets from a mid-term to long-term perspective. I tell you what I'm going to be buying, what I'm going to be selling, the reason why I'm buying and selling, and I use supply and demand, smart money concepts combined as part of my trading strategy. Why should you attend these sessions? Because they're important, because we generally have an 80 to an 85% win rate. That's a high probability win rate in Forex currencies, or Forex currencies, commodities, indices, etc., quite across the board. But apart from that, it is a specific place to actually get a feel of how we deliver our market information and education. Outside of giving you guys signals, I'm going to run down a few things, a few market sentiment ideas, building up from what I said last week Sunday, right? You saw for yourselves on Friday, the market's completely tanked. As we speak right now, Bitcoin is playing at about 21,000 US dollars. That was once upon a time, about 48 to 72 hours ago. Bitcoin was on track to go into 28,500, trading just below 25,000 US dollars. But so why did it fall? And why was I suspicious about this movement last week Sunday? And how did we move about our trading during the week? So that's what we do every Sunday. I review the markets for you. And today I'm going to do the exact same thing. I'm going to tell you, we're going to look at about 16 assets, right? About 15 currencies plus the DXY. But I'm also going to talk to you guys about a couple of things that I find interesting in the market. So if you like that kind of stuff, stick around, like, share, subscribe. And I think we should just get into it, right? So, I am really a product of my socialization, in many ways. I am literally a product of my socialization. And so because of that, I want to share with you something that my old man used to tell me all the time. And I think a lot of traders and investors are not really doing, all right? So this is from King Solomon. So it's not like Leroy's thesis or Leroy's ideas or Leroy's, King Solomon is rumored to be once upon a time, the wisest person in the world. And this is what he said. In fact, before he says this, right, the first, the first paragraph when he's actually talking to people in debt. He's talking to people in debt. And he's saying, if you're in debt and you live a life of debt, run, escape out of debt, right? And then he says, and for me, this is one of the building wealth principles 101. He says, go to the end, right? You sluggard. Consider its ways and be wise. It has no commander, no Leroy, no sensei, no mentor, no overseer, no ruler, yet it stores its provisions in the summer, make hay while the sun shines, and gathers its food at harvest. How long will you lie there, you sluggard? When will you get up from your sleep? Why? Sleep here means, inaction, not moving, not taking your finances seriously. Remember, the ant operates at a different level. The ant stores provisions in summer. When everyone is celebrating, when the sun is out, when everybody thinks things are going to be okay, the ant is busy working overtime, storing provisions. Why is this important? Everything is not going to be okay forever. Once again, I want to tell you, global recession is here. Once again, I want to tell you, China and Russia are planning some weird global crisis. It's going to change a lot of things. Once again, I want to tell you, Biden and just the general United States is local as usual. Once again, you will know there's still a war that is impacting supply chains. Once again, there's something called capitalism, which uses neoliberalism, which means you are affected wherever you are, in whichever country you are, because your government thinks along the same lines, which means locally right now as we speak, prices of fuel are high. Wherever you are, food prices are high. And this stuff has a long-term rollout impact, all right? It's not just a 2023 type of thing. Most of the market effects that we have today are actually because of COVID and how COVID started and the reaction to COVID, quantitative easing and printing money, and now the reaction to that reaction, right? And I've been saying this for 2 years. We're in what we call the lost decade, guys. So ladies and gentlemen, the summertime in our lives is going to end very soon. And I thought I should bring this up from my childhood because it's actually extremely important. Store your provisions in the summer and gather your foods at harvest. How long will you lie there? When will you get up from your sleep? Wake up. There will be opportunities that you will wish you took advantage of a long time ago. A little sleep, a little slumber, a little folding of the hands to rest, and poverty will come on you like a bandit, and scarcity like an armed man. This is my gentle warning, my kind reminder. I hope I have people who are subscribed to this channel who are constantly obsessed about their future. You can't change your past, but you can use your present to fix your future. Right, so what do I offer on my channel? Just market education. I hope to inspire and help you master your wealth, right? So this is what I want us to focus on, moving forward. Don't forget to check out our podcast. We're doing great work around this kind of stuff. How to Think Yourself Rich by Dr. Joseph Murphy. Right, but anyways, I thought I'd start off with this. Remember, every day, in every way, I'm getting better and better as a trader. Tell yourself that all the time. Right, so it's quite important because, times are changing. If you look at the Bitcoin chart, if you look what happened in the stock markets on Friday, very few people have answers. Like, why did price fall that way? I told you guys last week, Sunday, I've set free I've got 12 floor traders of 365, the branch in East London and Port Elizabeth, right here in Grahamstown. None of them, they're doing what they want. I'm not giving them signals. They're buying and selling as they see fit. And the reason for that was because the data that we had last week, which is really supposed to be what the market is basing its movement on. I'm gonna get to signals. Please, don't worry, signals are coming. There'll be chapters sometime when I edit this video. If you just wanna know what I'm buying and saying, you don't care about information, which is the currency to your wealth, then you can just skip this part. But this is important, right? I'm gonna do all signals like I promised, but you need to understand this. We got CPI that told us that inflation is dropping. Markets went on opium. NASDAQ jumped 2% in one day, and all sorts of crazy things happened, right? And I warned you guys on Sunday, and I warned you guys on Monday. On Monday, I wrote this telegram on my public free telegram group that I've set free my traders. I'm just managing their risks. I'm not managing their trade ideas because we're split on the floor. 8 of us are optimistic, and then there are 4 who are my core, who no matter what I say, set them free. They still maintain my sentiment, right? Because we've just been together for that long. And we kept saying something's weird in the markets, right? There's no ways you're going to tell someone like me who's been in the market for about 8 years, right, that all of a sudden a drop in inflation, which is a very minimal drop, with job numbers still very hot, right, would be enough to create that type of opium. But markets have been crushed consistently since December last year. Look at your charts. Since the last all-time highs in the NASDAQ, in Bitcoin, is 69,000, all kind of stuff. So any chance the market gets to rally, it will. The stock market, guys, was designed to go up. No one wants to buy stocks so they can go down. It's a long-term, futuristic, predictive of the future of good companies. That's the whole base of the stock market. It's an upward graph, right? But bad things happen, such as life. So, it's got these dips and stuff like that. So anytime the markets get a relief rally, it will take it. That's why we always say there are 2 different types of rally. There's a bull rally where you're in a bull market, in a bull sentiment market. A bull rally is a trend. A bull rally is a trend. But there's something called a bear rally. A bear rally is when price is going up, but surely, price will come back down again. A bear rally is simply a retracement for sellers to continue selling. All right, and I'm going to do some cool stuff today in today's war room. So I really hope you stick around because I want to teach you something real quick about market algorithms, about Wall Street algorithms, right? Because I've said this before in my channel, in my public lectures, when I used to do them in my live classes. I know I've covered this many times, but I'm going to bring it back to you one more time to really prepare you for what's about to happen. Now, if we are not careful, what happens is our capital is then used to bet up against us. And we really have to become careful about this, right? So I want to talk to you guys about a couple of things today, but maybe, before we get ahead of ourselves, let me just quickly show you the charts that I want to look at today in today's meeting, and then we can call it, not quits, but we can figure out how to move from there. Sorry, I'm just trying to quickly move some stuff around for you, my notes, right? So we're going to be looking at a couple of charts. Like I said, I am interested in USDJPY today. I don't want to repeat the same charts we did last week because obviously, hopefully by now, pending orders have been set And now I'm going to have to see myself personally for my trading, you know, where I was right and where I was wrong and how I average out. Right, so after 2 or 3 war rooms, then we go back and we look at results. Remember, as a swing trader, things take time. It's a beautiful concept. Things take time. Everything good requires patience. So the chart that I'm putting in front of you is what I'm going to cover with us today. All right, so we've got USDJPY, AUDCAD, AUD Swiss franc, AUDJPY, Euro Swiss franc, NZDUSD, EURNZD, EURCAD, Pound Swiss franc, CAD Swiss franc, CADJPY, Pound AUD, Pound CAD, Pound NZD, NZDJPY. What a beautiful run now. My goodness gracious. If you literally caught this, it's so far off now. But when we got into this trade early on into the year, it has just been the gift that keeps giving. You know, NZDJPY, and I think it's time for, I mean, I've closed the original 4 buys at the bottom, and you know, the other ones that we looked at in the war rooms, it might be time to end, you know, our buys here, right? And then DXY. So these are the charts that I want to look at with you, all right, today. But before I do that, I want to kind of talk to you guys about something extremely crucial and very, very important, and really to map up one for not for the last time, because teaching requires patience, and I don't mind repeating this. I'll find better ways to repeat this. I'll keep investing in myself to become a better educator to teach this stuff, but I'm going to repeat it. It's not the first time I'm saying this. I want to talk to you guys about how to become a good trader, and a good trader only has one main advantage, right? The only thing, and this is how to become a good husband, how to become a good wife, how to become a good child, how to become a good student, right? It's the same concept. You only have one big, you are only as good as what you know. If the information in your life is limited, then you are going to operate at a limited level. You are blowing accounts for many reasons. Yes, your psychology is off because you risk a lot. You are very undisciplined. You know not to do that, but you still do it because your emotions are unchecked. That's actually part of self-regulation. You're greedy, right? It's based on your narrative with money from your childhood. All these things, but at the end of the day, it boils down to knowledge, right? You only know what you know, and because you only know what you know, you only operate at that level of knowledge. So today, I want to make it very painfully clear how markets operate. Then we're going to get into charts, all right? So I want to do this one more time today, and I'll bring it up again if there's ever going to be a need for me to bring it up. Institutions, and I think we should really have some guiding rules here. Guys, no matter what you've heard on social media, on the fancy stuff, because I don't do the fancy stuff. I don't do the lifestyle content. I don't do the, I don't even care about how I film sometimes. I mean, some of you guys are so gracious and kind, and I appreciate you for giving me feedback, like check your audio, blah, blah, blah. Like, I just want to spew out information. But there's some traders on social media who really work on the luxury and the glitz and the glam to lure you in. And if you fall for that, it's part of your journey, right? You will learn from it. My job isn't to save you from everything. But what I want to tell you today is absolutely important. There's only one thing in the world, this is the most important thing. And you must only accept, you have to accept this truth. For me to be able to help you, for you to make money from 365 signals or whatever it is, you must accept this truth. The only thing that moves money or moves the markets in the world, the only thing that moves markets in the world is money. And when I say money, I'm talking about institutions. There is nothing else that moves the markets except for big volumes of money provided by institutions. Financial markets are a $6 trillion industry. I'm talking about Forex here. Stocks market just a little bit less, right? A couple of major billions, right? It's not you and me. It's not what I do. Even if I've got a registered flow, we are not turning over billions of US dollars. Right? That would be a big fat lie. Okay? Institutions move the market. Number one, if you want to become a good trader, you have to build your trading strategy style, understanding around this stuff first, period. The only thing that moves the markets are institutions. You are not an institution, therefore you don't move markets. Number two, markets, these are just big truths, because once you realize this, it's like when a Christian or a Muslim really accepts their faith and they fall in love with their God or Allah, that type of understanding of how little you are in the universe, you start to really appreciate how this thing really works. Markets existed before retail traders. So before we could trade as retail traders, markets had a function. You understand what I'm saying? Before me and you could ever trade in Forex, 1989, depending on which country, in Africa, it's in the 80s to the 90s, really, where brokers become a thing. Markets already existed. The stock market existed. The Forex market existed. What was new was the addition of allowing the retail trader to exist. Now, you have to think about it. If market existed before we could invest or trade, that means the markets already had a purpose, had already an alignment, had their own systems in place. They were doing well without us before us, okay? Now, I'm going somewhere with this. Trust me on this. Therefore, when retail trading became regulated, that is to allow us as retail traders to start trading, markets had a whole new added purpose. A new purpose, sure, but more for me, an added function. The business of the day still continued. Forex market is there to regulate trade between countries. So if I fly to America, my rands become useless there. I must exchange my rands for the value of the dollar so I can still operate in that country, but at a different currency, right? All that stuff still remains, but there was a new function in the markets when retail traders came about. And I wrote this stuff up for you this morning because it's important. The whole purpose of the market is to transfer wealth, the new function, from your pockets, right? Your pockets, my pockets, right? And this is what smart money concepts like to call liquidity, right? It is to get liquidity. It's not enough that they're making money from each other, right? Wall Street is a bloodbath. They screw each other up on price to make money, blah, blah, blah. But the new function is to get liquidity or make money from our pockets into the banks of the pockets. This is the only reason why retail traders were allowed to trade. This is not new. Number one, there was a guy, a big documentary, many books around this. The banking system. What are banks? Banks have cash. They make cash. They print cash. FOMC prints cash. But they had to create a product around cash to service the cash. So the only customers they saw was the millions of people around. So they got regulated, and now banks sell loans. To get your cash, they'll sell you empty loans. And it's a game. It's a well thought out game. The whole thing around this is around capitalism, but I don't want to get into that kind of stuff. Right? So this is why markets exist. If you understand this, you are one step closer to becoming a better trader, because your ego must shrink. You need to realize that the only way to become successful, the car you want, the house you want, the financial freedom you want, is fundamentally based on understanding these three truths. This market is not designed for you. It was never for you, and therefore you have to learn their rules. It's the only way. It is the blow until you're tired. I will always be here. Go do your own thing. You will come back. I've had people try us out, 365, disappear for 2 years to do other fast things, lose everything, and come back and start to rebuild accounts properly. There is no other way around this. Now check this out. Now because of this, when the retail trader was starting to bring, remember I'm a researcher fundamentally, that's my background, right? Rose University, Masters of Social Science, Masters of Finance, Masters in the International Federation of Technical Analysis, right? I've spent big part of my adult life researching, gathering truth. This is what me and my partner do. That's what we love to do. Now check this out. Now when retail traders started to come in, what happened? Systems were formed. Like literally, there's no time to give you all this good news, this information, but look, books, educators, and this was started by brokers. So here's the rule for brokers. You want to operate in our country, you want to get people to trade through your platform. Here's one thing: trading comes with a lot of risks. Therefore, you must teach people. You have to teach people about the risk of trading. So every good regulated broker, every semi-good regulated broker, and all the predatory, useless regulated brokers all have to provide you free education most of the time, all right, or point you to a resources somewhere on their website. There's always, please join this webinar, it's for free. We've got the expert John Watford, who's going to be teaching about stochastics. Tomorrow is going to teach about support and resistance, and next week is going to be a webinar on trend lines, right? It's a basic thing. Let me show you. I'll show you right now. I actually got the ICT Diploma 1 to come to, and I did the Masters. Most of those brokers, their educators are licensed and regulated by the International Federation of Technical Analysis. I did this stuff a long time ago, right? I'm going to pull up their website in front of you because, you know, I just want you to know that I'm not making this stuff up, right? And anyone can do it, by the way, as long as you pay, right? You have to pay, you have to join the course. It's about $800 for level 1, level 2, and the master's about $1,200, and it's like a thick syllabus. It's like a thick syllabus of all trading. Let me show you this thing. Let me show you. All potential trading, you know, indicators, technical analysis stuff. International Federation of Technical Analysis. There we go. IFTA. And I remember this because I had a one-on-one with someone last week Saturday, and he wanted to know what I'd done, all the regulation licenses I'd done, South African Institute of Financial Markets, you know, my IFTA, Institutional Portfolio Management with Anton Krill, all that kind of stuff. And remember, this was like an interesting part of my trading journey. Now, if you come to this website in front of you, the International Federation of Technical Analysis, right, and you take their courses, you're going to learn every single technical analysis that exists in the world. Elliott waves. Some of you don't even know about Dow theory in trading. There are so many things in here to know. If you do the certification and the membership, right? And when you get the syllabus, it's thick. It took me like 2 years basically to go through all modules, right? And this is what the regulated brokers push. Their educators will run you through all this stuff. This is like the biggest summary in the world of this stuff is baby pips. You know, all that free stuff in baby pips. Okay, I'm going somewhere with this because I want you to understand how this game is played. Right, you've seen the website. You can come back to it anytime you want. And you decide for yourself. But I guarantee you something is missing in these things. And what I realized was, we all have social media. I mean, most of you are watching stuff on YouTube. The birth of social media. There's this documentary on Netflix called Social Disruption, something like that. I don't know, but all the creators of TikTok, Instagram, Facebook, and all that kind of thing, they actually talk about the dark side. The creators of the algorithms, they literally explain to you what the whole platform was designed to do from the get-go. So algorithms have taken over, I always struggle to spell it correctly, have taken over a lot of things in your life, and you cannot deny that. There is a lot of big pull around algorithms dominate the world, right? Social media, e-commerce, Spotify, Take-A-Lot knows what you want because you said it to your wife in the kitchen. They're like, honey, we need a new vacuum cleaner. Tomorrow, all you're seeing on Facebook are vacuum cleaner ads. Algorithms have dominated the world. There's a ICT trading, right? The bulk of ICT trading is to understand how banks use these algorithms and then to identify the patterns that are created from that kind of stuff. That's basic ICT trading, right? And it's good information because algorithms, dating sites, what's that horrible one? Tinder, right? And all the other dating sites, right? We match you up based on your profile. So there's an algorithm for that. Algorithm, you go on a website, you accept cookies. Algorithms. That's what I want to indicate. When the retail trader entered the markets through the interface of a broker, algorithms were used and are always being updated and continuously being used. I will get to signals. Signals will be useless if you don't understand what I'm saying, all right? Now, if you understand rule number 1, which is institutions move money, the markets because they have the most money. If you understand that rule, then the question is, the real question, if you're a critical thinker, is, Leroy, why would banks need algorithms? I mean, they are the ones who move the markets, right? So let's put it this way. The market maker makes the market, right? Market maker. Why would a market maker need an algorithm? Let's even give it a much more practical stance. I'm a supply and demand trader, so I only talk in terms of supply and demand. I will not waste your time with anything else because nothing else works better than supply and demand in my own opinion. Right now, this is supply. Now, if I am a market maker, not a small bank, not an FNB, not a standard bank, I'm talking a global bank that actually moves the markets, right? And I know that these banks that I've just mentioned are not big banks because we train their flow traders sometimes. I mean, I was The week before I got sick, I was in Port Elizabeth training traders for a small bank. They also want to understand the global structure of finance. Now check this out. If I'm a market, I'm talking about market makers now, not just any small bank here. If I'm a market maker, and I know, first of all, market makers know where price needs to be because they have an agenda. So markets between supply and demand over a period of time. We call them positional traders because they hold those trades for a year plus. Year plus creates long trends. Look at Euro USD. Go to the monthly time frame. Zoom in. Look at 2008 in the last financial market crash. Look at where price is in 2022 today. You will see there is a decade of a downtrend. Then go to Warren Buffett's website, go to their company and see Warren Buffett shoot the Euro USD for 1.2 billion US dollars. He put a lot of money into that stuff and just hold it. Just hold it. He knew that there was a crash coming. Fantastic, that's fine. But he also knew that the crash was going to roll out a decade-long stretch of a downward trend. That's a positional position. So I'm asking you this question one more time. If I'm smart money and I've just bought here, let's say I bought price, I bought Euro USD. Let's talk about USD. I bought Euro USD right. I bought Euro USD. I'm having fun. I bought Euro USD, and price is coming back up, right? Then price, because price can't just flow up and down, and price comes back down again. If price is here, I already know, right? As smart money, this is going to be the trajectory eventually because of where price is going. Price isn't going up and down because it's a trend line. No. It's where price is going. Smart money is predetermined where price is going. Over a period of time, Euro USD will just keep going up and up and up and up in this example until we get to a supply. So again, my question, why then would smart money need algorithms? Why would you need, if you control the market and you dominate the world, why would you need algorithms? Here's why. Because most of you, you're struggling against this stuff and you don't even know your enemy, right? To know their enemies, to know yourself. Out of all, number one, you think your broker is always trying to manipulate you, and maybe it's part of it, but you know, the markets are heavily manipulated at a higher level than just the broker. The moment you get into trading, you've consented to a lot of market manipulation completely due to ignorance, okay? These are the rules of the game. Now, the first question here is, first of all, because we know market makers move in big volumes, who are they buying from? I cannot go to a dealership and buy a car if there is no dealership selling the car. I've said this many times. I can't go to Pick and Pay to buy bread if Pick and Pay does not exist to sell me the bread. For the banks and institutions to buy Euro USD, there has to be someone selling it. But wait a minute, Leroy. If markets are going up to a supply and it's clear that price has to go up, who would be selling it? Who would be dumb enough to sell it? No, who would be stupid enough to sell it? That's the question. Because there's no ways you're going to tell me that, look, Leroy, buy Bitcoin today at 21,000 US dollars, all right? Because I promise you one day Bitcoin is going to be 100K, all right? There's absolutely no way in the world I would sell my Bitcoin if I knew that for sure. If I knew for sure that a year from now, 2 years from now, a few months from now, Bitcoin is going to be 100,000 and I'm getting in at 21,000. I got in at 3,000, 4,000, 5,000. I'm buying. I would have to be someone stupid to sell, right? Because then I don't understand the whole game of profits here. So how does smart money then create a dumb person here who's willing to sell Euro USD that is supposed to go up, but they decide to sell because smart money sees the value and you don't, or vice versa? Here's what I believe happens all the time. Most of us outside of the registered students who now have the right information, most of us have been taught to understand markets from two lenses. Lens number one is fundamental analysis. Fundamental analysis is amazing. Fundamental analysis talks to us about the intrinsic value of price, right? So look, this is the price of Bitcoin today, 21,000 on the chart. But Bitcoin is technically, if you talk to guys at JP Morgan, they believe the intrinsic value of Bitcoin today is around about 30,000 US dollars. So the difference between where price is right now, 21,000 USD and about 32,000 USD, that's the move for a fundamental trader. You with me? A fundamental trader looks at the inherent value. What is it actually worth? Not what is the price right now. What is this thing worth? And then they trade that. They trade those fundamentals. So today the price of Bitcoin is 21,000, but it's technically worth 32,000. So the trade idea is to buy Bitcoin now up until it gets to 32K. That is its intrinsic value. That is it, right? That is how a fundamental analysis trader would look at something like that. A technical trader, TA, has been taught to look at different things. Elliott waves, indicators, stochastics, support and resistance. And I want to tell you, 90% of trading systems via technical analysis, whether it is software, indicators, Elliott waves, BTM, whatever, or all of them, most of them at the end of the day are a dull version or a very complicated version, right? There's a spectrum of support and resistance. Nothing more, nothing less. This type of technical analysis was pumped in the 80s, was pumped in the 90s. I'm talking books, I'm talking massive funding. We looked at the history of this stuff. How many people were pulled out to write books to teach the stuff? Because you must, I will post a link today in my public Telegram group today of a documentary of trading from the beginning, from the floor, right? From the floor, from the pit, where there were no retail traders, just Wall Street people, to computers, right? Where all of a sudden those guys had to learn how to switch from computers. I'll send you that documentary today, the link in the public Telegram group. Because when you start to see that, you'll understand that there was a switch in the market. And even floor traders had to then become screen traders, chart-based traders. But that switch then also opened the door for retail traders. But supply and demand existed in the pit. They bring it up. It's not me. I'm not pushing my stuff. I'm simply saying it is what it is. Now, watch this. Because of that switch, the technical analysis that was pushed out, guys, a lot of it was in line with that website that I showed you for broker education to teach people how to read, have some basic understanding of the charts, number one. But don't forget the purpose of the market that we did at the beginning. The purpose of the market, I'll tell you again, you must accept this truth, is to transfer wealth from your pocket to the bank, the pockets of the banks. Just like housing loans, car loans, all that kind of stuff. The whole purpose is to take your money. So I'll ask again, if I was a money maker, if I was a bank, and I'm using algorithms, what are my algorithms for? If I already know where price is going. In our course, we say price is everything. Price is in everything. Price is fractal. These three things simply mean price knows where it's going, right? If you're following smart money is pushing price up. It's not like it's a car. You get into a car, you go into the shops, you drive a car. It might be a Tesla, it will self-program itself. It will still go there. It might zigzag, go up and down, 10 left, 10 right, but its destination is clear. So why are there algorithms? This is why. And after this, I'll move on to charts, because I know I've bored a lot of people. If I haven't bored you, please like this. If there's a light bulb moment happening, like it, because that's the whole point of the sound bites. I think it's important to understand who you're dealing with. Now, the algorithms, and I want you to hear me carefully, the algorithms simply exist for what I've just told you. The algorithms are not there to tell the banks what to do, because the banks already know what they are doing. Because truth number one is the only thing that moves the markets are institutions, period, with their money. The algorithms pack all the trading nonsense that we all have come across. I spent 4 years losing in the markets, trying different strategies, different mentors, different gurus, and I don't regret any of it. It was my learning curve. I was stubborn. 4 years, right? In those 4 years, all I was doing was playing to the game. The algorithms pack all that TA nonsense. And instead of, in our example here, I say the smart money wants to buy next. They're going to buy here because eventually they want to get to push the price up. The algorithm is not here to tell smart money where to buy. The algorithm tells smart money where retail traders are bound to sell. Because for me to buy a car, I need someone to sell it to me. Are you guys getting this? Like, I want you to understand this. The algorithms are there to let them know when to strike, because they've created a group. Look at this. Look at this. This is John trading against the crowd. Trading against the crowd is simply, this is what I'm telling you about, right? This guy literally mapped out another floor trader. I only follow institutional traders. I only learn from people with a real life experience, right? My 2 years as a floor trader, Alan Gray, was not enough. So I keep digesting this information. I promise you, this book should be available to all registered 365 students in the resource center, right? But one day I'm going to take the time to read it for you, right? This is trading against the crowd. The algorithms let smart money know when the crowd, right? So what you guys call liquidity rates, stop loss hits, and all those stop loss hunts, when there is a crowd of people about to move on a position, because that crowd has been taught to think one way, the wrong way, that's when they strike. Another good book by James, The Wisdom of the Crowds, right? These guys, now watch this. Let me move. I'm getting too excited because I hope I am landing it to you. I hope your eyes of understanding have been open. I hope you're becoming the ant. You need to move like this. Now, this is what's going to happen in your charts all the time. All the time. This is smart money's idea of how Euro USD needs to move, right? I'm wrapping this section up, right? How it needs to move, okay? Cool. Now, what smart money is going to do at this moment is simple. It's very, very simple. All they need to do is to create a system that looks like this. Now, price does not come out of nowhere. It's not random. So let's say, perchance, before markets came down here, markets were actually doing something like this, creating lower lows. If you watch my most recent video, sorry, let me draw that quick. Watch my most recent video on scenario analysis part 3. I've taught you guys on breakout structure and change of character, concepts that you need to master for intraday trading. My previous video, please have a look at that. Breakout structure, change of character, right? That's very important to learn, right? So I'll put it up here, right? So right click on that and put on a new tab and watch it later, okay? Somewhere up there. So I don't know where, but it's somewhere up there. Right now watch this now. Well, before smart money could buy here, because remember, smart money wants to buy here, someone wants to buy there, etc., because they want to come here, right? I would guess the structure of price 9 out of 10 times would look something like this. Markets will be coming from a downtrend. That's number one, because that's just how they roll. And all your technical analysis, your indicators, overbought, oversold, stochastics, your Bollinger Bands, your moving average is pushing price up and pushing down. All that junk that you've been taught will be in alignment with this. And what's going to happen is someone's going to draw a trend line here like that, right? To make matters worse, where price is about to take off here to go up, let's put it this way. Let's say there's a support like that, right? So here you've got a support. A support is where price arrives, and then you buy, and markets hit a trend line. A support again, buy, markets hit a trend line, and all of a sudden, your technical analysis changes on you, tells you something. It tells that there's a downward trend line and a support has been broken. So now price has dropped. So when markets come back to the support and make contact with the trend line, what does your technical analysis say you must do? Well, it's time to sell. True or false? True. The algorithms, 9 out of 10 times, would have identified spots like that for buying and selling in the market. Smart money will be waiting for you right here to buy. As a retail trader, you're going to try and sell here. Your stop loss above there, markets are going to pull through and boom, leave you out. So you take your money and continue on their journey. This is the game, right? You're going against big banks, institutions, and their algorithms. And you've got retail traders, short-term, long-term, medium-term traders. There's a lot of moving pieces, and also the type of broker you choose. I hope this was beneficial to you. If you would like, for whatever reason in your life, if this has helped you to minimize as much as possible the accident awaiting for you, then I would suggest you click down on the link down below and really give it a shot. Register for the 365 Trading Academy course, because we focus on how institutions move. We focus on supply and demand. We focus on levels that actually matter. You just hit this link down here, register, and my team will be in touch with you. All right, but on to business of the day. ladies and gentlemen, on to business of the day, where we are looking at our signals and the markets. You know, that we've got about 15 currencies to look at today, and I really found this interesting. This is the trajectory of Bitcoin. Let's start with Bitcoin. Okay, let's start with Bitcoin. And not just Bitcoin, right? This is just a bloodbath across, you know, crypto. You know, I mean, Ethereum is about to announce, you know, or has announced actually, sorry, the sum total of a triple halving, right, with this Ethereum merge. I don't know if people are aware of that, right? That's like major bullish news. There should be nothing to kind of like stop Ethereum right now from being at 2.3, 2.4. Right? And you saw Ethereum explode, you know, just a few days. I'll come back to Bitcoin. Give me a second. I'll come back to Bitcoin. And I find the Ethereum chart even with cleaner levels to read than Bitcoin most of the time. There we go. You see, we marked out that the supply was going to get broken and my trajectory was going to come all the way up here. The supply gets broken, a strong push up on Ethereum, and all of a sudden, Thursday, Friday, Saturday, you know, prices tanking like crazy, you know, bringing us all the way back to these lower levels, taking out a demand, you know, on the way. And then again, we spoke about these levels here for it ever to buy again, and that opportunity might slowly but surely start to present itself. But the question is why? Why? And today's war room, I really want you to understand that there's information that you get for free. There's information that you can get on websites, on PDFs, and all this stuff. But that information might be putting your trading in jeopardy. I'm not even ashamed to do this again. Register for real information, please. But check this out. So where would the world go? Where would we go to find out why is Bitcoin falling? So I went to CoinDesk. I went to CoinDesk. I'm like, geez, CoinDesk, what's going on? Check this out. Mackerel, I want you to listen to how, when I said they must find dumb traders, stupid traders, just listen to this. The decline in crypto prices appears to be linked to poor inflation data I'm not making this up, in Germany. If you go to Forex Factory, Germany had PPI data on Thursday and Friday. If you guys don't follow that kind of stuff, but I look at the whole Eurozone from a London sessions trader, right? So yeah, so Germany messed up their inflation, right? But is this new? This is not news. We're going to a global recession. Inflation is going to be high forever. And I've been saying this. It's not just me who knows this. It's not Leroy's secret. A lot of good traders out there know that inflation is a real problem. A lot of good traders know that the opium hope in the markets right now is very good, but could be short-lived, right? So for you then to say, because Germany missed the inflation data, right? Bitcoin sold off sharply on Friday is junk, right? This was Friday's article. I call bull on this. It's absolutely nonsense. Because the real reason why Bitcoin sold off is the same concept I've been trying to teach you guys on this channel for a very long time. There is a coupling between crypto and tech stocks. Tech stocks under NASDAQ. There's been a coupling between crypto, tech stocks under NASDAQ. Now, Germany stuff, you know, Germany being an annual producer, show the inflation rose to 37% annually versus the expected 32%, right? So that's a big deal, sure. But I don't think that's why Bitcoin fell. This is absolutely nonsense. It's absolutely, you know, it's just rubbish. Now, what a lot of traders don't know, because you guys are not yet in my senior traders program, you know, minus the 100 senior traders who watch the stuff, right? We spoke about this on Wednesday. My last senior trader, you know, live session was on Wednesday during the EORCHF session, and we're looking at meme stocks, right? So there's meme stocks. You know, you've got Dogecoin, meme crypto, they're meme stocks. And this is a very, excuse me, I'm not sick, just getting better and better, right? Bed Bath and Beyond. This thing fell. And this meme stock had, look at this on the daily time frame, right? We bought this together in the senior traders war room, right? Nice and clean, like just clean levels, man. You get a stock below $5. And you know they're volatile. So the move between 5 to 10, 5 to 15, 5 to $12 in the stock market with some good leveraging, that's some good money, right? So we identified these clean levels with the same technical analysis that I teach on this channel, supply and demand, we're gonna buy there, and we knew where to get out. Some traders got out here. I definitely offloaded a lot when price got here, and then the ultimate place was somewhere here. This whole area is technically what we call a weekly supply. But if you go to the daily time frame, Bed Bath and Beyond, it's just a meme stock. It's a fun stock to trade. Literally rose from about $4 US, $5 US per share. Think about this, per share on the 6th of August. In 1 month, the date today is the 21st of August. In 1 month, the stock moved from $5 per share to about $25. It's 5x. That's crazy. That's, put 10,000, you 5x it. I mean, in 1 month, that's good money. That's really good money. Right. So, and then all of a sudden, markets exploded to the downside. You see this there? Gap down, gap down, gap down. Crypto and tech stocks, especially the weak moving meme stocks, have been moving parallel. So this, and this is why it falls. The same Wall Street traders who are finding these small picks, these things that we are looking for, these very cheap stocks that are going to be very volatile, very quick, that's Wall Street bets, right? We call them Wall Street bets. These guys are generally always in the same cluster of assets, all right? If they're in Bed Bath and Beyond, they're in a stock called AMC. I don't know if you guys know about AMC. We don't really do stocks a lot on this channel. I'll try and bring that up towards the end of the year and to be a big feature next year. All right, so AMC, stuff like that. But the same traders trading AMC, Bed Bath and Beyond are also the same traders invested in crypto, okay? So when your stock does this and surprises you like that with a sharp move down, immediately to stay in the game, most institutions, hedge funds, blah, 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 need to sell something to hold on to trade or to hold on to a sense of survivability. Because remember, margin calls always look like this. You're going to get margin calls. So these guys start to sell gains from their crypto. Remember, this is the same Bitcoin that has been in an upward trajectory for the last almost 2 weeks. Right? So all of a sudden, you need cash immediately because you over leverage on a stock and then boom. So you just start to sell. And these guys started to sell a lot here. Days ago, Thursday, Friday, to make sense of the world, right? So that's why Bitcoin fell. It's the decoupling that's happening in the stock market, not because the German data. I mean, inflation is up everywhere across African countries. This is not new news for the markets. Markets want new pain. For them to move on pain, they need new pain. That's why, despite my feelings around CPI data, we're still at a big rally, right? Markets are looking for relief right now. Now, how do we move with this information moving forward? The truth of the matter is right now you have to watch how price closes tonight. Tonight being Sunday. If you watch this on Monday, then I'm sorry. Oh, but look at how markets close and open on Monday. It's the same thing. The reason for that is when crypto is risk on, when the markets are risk on means there's no fear, it's now time to invest. Crypto is a good place to dump your money, right? Look at this, boom, it'll move. Risk on markets, boom, 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 right? This is good money. When markets are risk on, this is good. But when markets are risk off, investors switch and go to, things they can trust. S&P 500, the dollar, right? Those things might fall, but they won't fall this rapidly, and they're not as volatile like this, all right? So risk on, crypto moves harder and does better. Risk off, your classics, S&P 500, stabilize better than crypto. So you want to see how this market closes today, because if we have a red day, guys, today, Sunday, I promise you, on Monday, the stock market is going to pay a lot, feel a lot of pain. There's going to be more hell to pay when I have another red day on Monday. But if this market starts to stabilize and maybe wants to recover and shakes it off and says it was just a bad 2 days or back again, and then I'm sure Monday, Tuesday, we might start to see across the board recovery in the stock market, right? So these are the kind of like things to look out for, earlier on this week, Monday, Tuesday, etc. And just to maybe explain to those of you who were confused at why all these things are happening, right? So we've spoken about it. Don't believe the hype. It's not because of Germany, right? There was a margin call. A lot of traders lost a lot of money in the stock market on Thursday. Friday is a sell-off day, right? And I posted about this stuff on the public Telegram group. If you look at NASDAQ, just using a combined method in module 2, which is your 365 numbers and your Fibonacci And maybe let me use a clean chart because you're not going to see it. Pepperstone. Let's use Pepperstone. I just want a clean chart real quick just to show you something, cool. Right. So, all right. So look, I've got Fibonacci drawn here. Right. This is an old Fibonacci. Let's switch to the weekly time frame. There we go. Right. So this Fibonacci is tracking from the ultimate all-time high last year, December, to where price has now recently bottomed. Right, in June. Sorry. Right, and where potentially I might be looking to start selling again if I'm not yet convinced that markets are now back to going to the moon. So I'm not yet convinced. So I'm still looking for long-term sell setups. Right? So that's what this chart is telling me. But I want to understand how some of us knew, and I saw a lot of Instagram stories. Martin, what's I think you call yourself Lord FX Collins. You got this weird cool name, man. Right, but I saw a couple of 365 traders were posting on their Instagram stories about selling Nasdaq on Friday, and that made me so proud because it wasn't a signal I gave you, right? Or I was in that market, and you guys saw it for yourselves, and that's what I mean by operationalizing these rules that you're getting from the course. This is a fascinating thing. Simple. I've said this many times. Look at the structure, and then you look at the latest phase, right? So this is all one would have needed. Yes, I've taught you recently now about break of market structure here, blah, 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 blah. But without that noise, without that stuff, if you draw a simple Fibonacci from the latest market phase all the way to the bottom, you get a clean Fibonacci touch of my golden ratio area. It's a non-starter. Markets landed here on Thursday. It was now time to sell. Like if you're that type of a trader whose instincts are driven quickly by risk, this is the tool that I gave you guys to master. That's on the weekly time frame. I'm just going to switch to daily so you see what it looks like. Look at that. And it's an original turn, right? Because it literally clears off a supply and breaks. And I'm sure you'll find just down here, H4 to H2, H1, a couple of classes of supplies just about, holding price down, right? So that was a nice clean, what I thought at first was going to be a clean short-term intraday trade that actually turned out to be an incredible money maker, a fresh supply hidden on the H4 time frame. Price comes in, sitting at that golden ratio, just a perfect hit, and markets crumbled at that point, right? And I've taught this many times. We look at the 365 numbers, and you remember with our 365 numbers, we're looking at a 25 to, about a 25 to a 30 point difference. Just give me a second. Let's make this. I just want to make it clear, like crystal clear, that you guys really, you're at a beautiful place of empowerment, right? So depending on how you draw it, right? Big area of value there, right? If you look at this 13, 16, 17, right? 13,600 would have been what you were looking for, but I chose a higher sell, fundamentally based off the fact that this doji was too long, and I didn't want to be, at a major risk. And somewhere in here, if you go to H1, H4, you get closer and closer to 13,700, and that's what helped, right? So this is just a simple market mechanism, right? And markets are crumbling, but there's a chance that they could recover. But I think the recovery is going to be based on us, retail traders, this weekend. And if we want to save the crypto markets right now, or let them fall back to 18, 17K, all right? So please watch, how charts in. Sunday night and how they open on Monday in terms of crypto, and then just project that into the stock market and make your money, right? So, onto the business of the day. I don't think it will take too much time, with these assets. USDJPY is the first asset that I want us to look into. I'm just going to close these tabs here so that I don't get distracted. I've given you the cryptocurrency update, and once again, link down below. Definitely think about investing in yourself. Be like the ant. This is your summer. Take time to learn while there's still time to learn, right? So USDJPY, remember we spoke about this buy a while back, and I told you guys to lock profits or break even. I think Mom Eunice also a while back spoke in the group. She wasn't sure if it was going to be a long-term buy or not. I remember reading a comment along those lines. But yeah, so we spoke about this, right? And I just want you to know, in relation to DXY, I just want to bring up DXY real quick, the dollar, because remember, you have to trade correlating markets. DXY, DXY. Right, so here's the dollar. Right, so I'm managing my USDJPY trade, but I'm doing it in relation to the dollar. Now you remember, I missed this part. So this zone is new. It's not a trade I'm in, right? It's a trade that I chose to ignore. In one of the forums, I spoke about why, and fundamentally because I thought it would be better for us to buy lower. On Friday or Saturday, Friday, whenever, I sent you guys a long message on EURNZD. EURNZD was a trade we did, a trade idea I gave in a previous forum. Please understand what it takes to become a systematic trader. You have to have a good trading journal. And I wrote a long message to everybody in the public Telegram group. I put on my social media, this is EURNZD, and I said, this has happened to me now 9 times in the market space, where I am choosing a primary, area of value. For example, that day the idea was to sell here. So I said, price might come here, I might do this, and go up, because I know that in general, sell high, buy low. But instead, it happened 9 times in a cluster of 40, or rather 2 sets of clusters. So I trade in clusters of 20. 20 trades is 1 cluster. I pause, I look at my progress. I had 20 trades. How many did I lose? How much money did I make in relation to how much I lost? Did I really bleed out my winners? Because that's the whole point. Disciplined trader, right? Disciplined trader, right? And then I've noticed that 9 out of 34 times this has happened where I choose a higher area of value or a lower demand like the DXY, and markets don't make it there. And it's like, but Nero, you didn't lose money. And my point in that long message was, remember that you lose money by missing out opportunities. I don't know when I'm gonna need a lot of equity or a lot of capital. I don't know when I'm gonna have a bad trading week. I don't know when I'm gonna have a bad trading month. I've had bad trading months before in the past where it's just bad. Week in, week out, markets are just bad. What saves you is the fact that you've been consistent throughout and you can handle those times. Your capital doesn't just disappear on you. You can handle those times. And this is fundamentally something to really consider. You absolutely have to consider that particular situation. Like, where do you stand in the whole game? And so I said, I'm making adjustments now. I'll be looking very carefully at risking a little bit in these first areas and still maintaining the original rules, just not to miss out. But the same thing happened on DXY, where I was waiting for a lower demand, and it didn't happen. 365 traders. Here's another thing that I've noticed. I'm talking to registered students right now because you guys have my whole playbook if you've already enrolled in the course. Most of the times when there's a clash between 2 zones, daily and weekly, are the time frames to go check out, to go figure out what is actually going on there. I've come to that particular conclusion. I don't know if I bumped my camera or what's going on, but yeah, it'll come back when it wants to come back. I'm here with you, okay? Sorry about the green screen. Right. What happens is, it seems to me like this mismatch between waiting for a lower zone, in this instance, for example, the DXY touched the proximal line, all right, of the weekly demand and did not feel the need to dig deeper for buy orders. All right, so let me show you what I mean. You see where this white zone is? This is the zone that I ignored, and I said I'm going to wait for a lower buy. So I wish I'd bought into this thing. Remember, we'd been selling the dollar right into this target area, but I chose not to buy here and wait for the lower zone, right? So I took profit, got off the sells, but the reason why this zone worked so well is, check out, let's just put a line here, a line there, and a line there. So this would be the zone, right? Now look what those 2 lines look like on the weekly demand. Oops. So you see the proximal line of that daily zone, which is where you'd have entered. Let's say it doesn't matter, let's cut it out. And the bottoming of this zone, or rather where this red wick comes all the way down, triggered a whole weekly demand. And for the higher time frame process, your module 1, we know that this is it. This is MTA. This is literally how we bag most of our money throughout the whole year. All right. So we now need to be very careful about these intersections. If I draw it like this now, white zone there, and you pull out the daily, you will see it's almost very difficult to tell, but you know, you could have had buy orders in here, etc. I didn't want to take that particular risk because once again, I thought price would dig deeper into the daily areas, and I really almost, I think it completely ignored, you know, that proximal line on the weekly, right? So that's how I missed out on, you know, this money. But now back to our first chart of the war room, which is USDJPY. I'm very worried about the situation here because again, we don't know. We're in a governing supply, which is supply, daily supply, and markets have come back to a fresh supply on the daily time frame on DXY. All right. So I'm telling you this: when markets open, right? I mean, Bitcoin might, you know, tank even more, and if it does, it might give dollar a reason to be strong and to break through that supply and go to the upside. But that's the risk I can't take, all right? Because I've really, really, really enjoyed, you know, taking this trade. You know, we're currently up, you know, 1:7 if you got in with me. And you're like, Leroy, when did you tell us? War room number 72 on this channel. Go check it out. Most of the war rooms have chapters. You'll see I tell you this stuff ahead of time before it comes. That's what you're going to learn to do for yourself in the course. You see price the way it is, right? So because of this, I'm very intrigued. I'm interested in taking profits because if the DXY is at a supply, and USDJPY is also, you know, right at a supply, there's a chance that it might drop. There's a chance that it might choose higher supplies, meaning DXY might break through, right? That analysis where things keep being bad for Bitcoin and stocks keep to fall, money will go straight to the dollar. But I can't risk the money I have on the table right now. So what I'm going to simply do is take all these profits and then new pending buy order here. Once again, close this and a new pending order here. So I'm taking my 1:7, very good trade for USDJPY, but I'm setting a new pending order there. So that's War Room 72 USDJPY. I'm going to close it, and then we're going to start a new one for War Room 77 today over there. So if there is a fall here, then hopefully we'll catch it back up there. But if markets proceed to go up, we'll come back and then review that scenario, right? But 1:7 on USDJPY, you know, it's actually been quite a phenomenal trade, and we'll talk about, you know, the results of about all these type of setups later on. Right, no more side talks. AUDCAD is the next chart for the day. AUDCAD. Okay, really angry, a little bit angry with myself. You know, I honestly went in with a very small lot size. This area, imbalance, fresh touch, etc. We could have really made some serious money, right? You can see I put X's here, and I made it yellow for sell, but I gave it a red boundary, meaning high, you know, still some type of risk due to the class effect, right? But yeah, I was hoping to hold this trade all the way down there, but to be honest with you, trying to keep it fresh with you, I'm most likely going to close AUDCAD, you know, come tomorrow, right? This might happen. It might also continue going down. But I don't care about this trade because I'm risking, you know, peanuts in it. Like it's nice to have as a win, but it's not really generating money. So I just want to get it out of the way so I can clear my trade in general, because I'm about to finish a new cluster of 20s, and I don't want this to be a lingering trade, right? I want serious trades moving forward. Okay, so this is just, should you buy when price gets down here is what we should be talking about. And that's what we kind of like, you know, tried to negotiate around the last time we spoke about this chart. But the fact that there was a sense that price was trying to leave a governing demand. But the problem is, on its way up, it hit a supply. So we started to sell, right? You can see there, right, in the same month of August. But markets were coming from, you know, a strong-ish demand, you know, the March 2020 recovery demand. And I suspect, like Euro USD, Pound USD, all risky assets, I suspect that we have a long way down. It's just getting trickier and trickier now, you know, to maintain that perspective, because we're about to get into some serious buyer's territory. Life would be good if maybe we're still holding the sales at this level. Then you would know that, you know, whatever zigzags come your way, you know, life is good, and you know, you can just, you know, bear the storm. But right now, markets did not close, you know, convincingly on Friday. And we closed with a bearish engulfing pattern there. Then yes, sure, I would still hold this little, it's not little, but you know, 400 US dollars long term, I might as well just, move on to a different trade, 443 something, whatever it was. So this is something that I'd like to close in the markets right now. I'm definitely closing, by the way. Let me just be clear. Markets didn't give me a bearish engulfment. If I'd gotten a bearish engulfment, I would have understood that maybe Monday, Tuesday, there will be a retracement up, but the sell pressure is going to continue. But because the Friday candle fails to engulf, I am now skeptical. I mean, there's a demand there, and then the whole green zone is just demand. So I really have no choice but to pack up EURCAD, put it by the side for my type of trading style anyways, and wait for it to come all the way up here, if it ever does come there. Or at least see how the next 1 week or two progresses, all right? 1 week or two progresses. So anything can go there. Yeah, we've got this situation, sure. Right, a little break there of that structure situation, and if we'll see how price goes. But for me, I'm closing AUDCAD Monday, and then moving on. AUD Swiss franc. Yeah, and this is what war room should feel like. At some point, guys, we need to go like, oh, we're in these positions. We spoke about them. How do we manage them, right? And sometimes we'll find new opportunities like USDJPY, but sometimes we also got to manage our trades, right? So there's a lot of things going on this chart. Let's see if we can clean it up. Clean it up, clean it up, clean it up. I told you guys about this high-risk cowboy area marked in red. You can see markets keep consolidating. I told you it was going to be an annoying bounce between, right? Very little risk-to-reward ratio. And so the lines I'm busy removing, you see, we're pointing to rather, coming across and waiting for price to come all the way up there. I still kind of stand by that, right? So what I'm noticing about these AUD pairs, the ones I clustered for today's war room, is all of them are sitting at significant demands, right? Governing demands. But all of them look like they're going to break these governing demands in the future. And so, word to the wise would be AUDCAD is something to look out for towards the fourth financial quarter for some crazy sells. Like that's my personal feeling, which means the Chinese crisis is going to get worse. I literally introduced the Evergrande crisis last year in November on this channel, and I told you guys that the housing market, I don't know if you guys know what's going on in China, it's crazy. There's so much going on in the markets. I could do a live video every single day with market updates, because I just sit here and look and read and learn and trade, But if Evergrande, remember Chinese market is linked to a lot of commodity markets that require gold, so CAD, AUD, NZD, terribly affected, right? And I suspect like all these AUD pairs seem to me like they want to do something like this, right? So, but selling in here is always a high risk, which is a risk that I'm not willing to take, okay? But if the opportunity comes, I'd rather go for the highest sell, right? So you can see in that high risk area, cowboy area where prices right now, we finally have a bearish engulfment, right? Which is quite interesting. But we don't have an entry, man. Guys, there's nothing, like this stuff, this is the pits for me. This level, this type of range, it's the pits, it's you're up 50 pips, then you're down 48 pips the next day, then you're up 48 pips. You're like constantly moving between negative and semi-positive. I really hate trading like that, right? But this might be a clean break from the rally somewhere in here, but I'm not in this trade. Right, and the reason why is because I could never sell on top of a demand. So what I need for me to jump back into this market, like I said last time, is for markets to come back here. I need that. I really, really need that. I need all of this range to be done. I need all the liquidity to be grabbed. I need those who need to lose money, and I need price to move, and break those the supply block there and break anything. I'm making this chart a little bit too messy than it needs to be. But I need price to just break all these areas of value there, and then proceed up here, right? Proceed up here. That's what I'll be waiting for. Then I'm able to sell, because just between there and there is good risk to reward ratio. Right. Next chart, AUDJPY. AUDJPY. I hope you're enjoying this. If you are, don't forget to like. It's the list you can do. Feed what feeds you. It's pour into you what pours into you. Pour into you what pours into you. Feed what feeds you, etc., etc. Still holding, nothing terribly has changed. And the reason why I'm still holding is because of monetary policy divergence. Remember, I told you guys, and I repeat myself because nothing has changed until October-ish, I believe. As long as these guys keep maintaining quantitative easing, and everyone else is doing what they're doing, then all these currencies will be slightly have an edge over the Japanese yen, and for that reason, I'm going to keep holding, right? So, and obviously the clear target for me is the supply area just above, right, where markets once hit, and we want to see if price can go back to that area or not. If you go to the weekly time frame, you will see, similar patterns. So from day one, AUD, and now the big money maker, you'll see later on, NZDJPY, same concept. Markets will have these moments where, they slush down, and then you break out, slush down, break out, slush down, and I'm hoping for a final breakout. So that's why I'm still holding this trade. Very happy with it in general. So, not much to do. I gave it to you. If you're in it the way I'm in it, then it's time to lock profits if you haven't already. Okay. Number one, why? Because we now have, this bullish engulfing pattern that started the month of August, and it's finally been tested. I didn't add a buy here, unfortunately, but hopefully it will sit and hold. But what we're waiting to see before we can really make a final commitment is what's going on here, because we had a bearish engulfing pattern and a new bearish engulfing pattern. And we really want a clean run like this. If we can get one more clean run, like this, just this one from, the month of May, that would be golden. Okay, that would really set us up, very close to perfect. You see in there, there's a daily supply within the weekly supply, right? Just a perfect ghost iteration, so that's what I'm hoping for. And if that happens, I'll most likely start to really consider taking profit, just before here for trade one, and then trade two just before there, if we make it in there. All right, so that's AUDJPY. I do not, for those of you who are not in the trade and you're looking to get in, I genuinely can't see a 365 rule-based entry. High risk maybe here. One would argue that maybe it's already happened. And the risk, the entry I'm showing you right now, I'm not taking it with you. I like my low risk entry. That's the whole point of coming to war rooms all the time, watching these videos all the time, so you can get in as early as possible, right? So, maybe this could work, right? If you're looking for a fresh entry, but you've got a lot to deal with, in my humble opinion, right? In front of you, you've got a lot to deal with, right? But if price can break out of this, short-term downward trends and then explode to the upside, that would be great. That's honestly what I am, looking for, or at least looking or hoping to happen, right? While we wait, because this area here was removed completely, right? But market still sustained up. And then when you think about it, once again, if you haven't watched my latest video, just put all these things together, right? Look at this. Markets failed to create a higher high, so instead went down. But markets failed to create a lower low, instead stopped here. And now markets are going back up, right? It's slightly higher than this area, it's changing character. So this is a possibility, right? So a very big possibility. But overall, this chart in front of us looks very confused. All right. Overall, the chart in front of us looks confused, so this becomes high risk. If you bought with me on time, then just hold. Stop losses can start being moved now to lock some profits. Just secure this whole area there, and you're risk-free. Something that's simple. Just become risk-free so that you can then operationalize, free up some margin for future trades. Chart number 5: Euro Swiss franc. Euro Swiss franc. We're literally just doing a round here. I know for a fact, I'm not going to be happy with this chart. Why? Anything Swiss franc is always so annoyingly complicated with the long wicks. We can see here on the governing time frame, we've got euro now. All of a sudden, I said it would surpass and break down below. Right? Remember, I told you guys this was going to happen. This thing was going to break down below. And now it's up to price. I can even remove this red line now. It's completely up to price now that they've filled this whole week now to decide what to do with us, right? The big money maker is waiting for months, 2-3 months, for price to come back somewhere up here for a big sale. The student who understands supply and demand and smart money constantly can identify a change of character and price from the H1, H4 daily time frames and hold those trades, will be able to ride the wave all the way back up. But until then, Euro Swiss franc has been printing some heavy blocks. So you can see on the weekly time frame, we have to deal with this, right? This is going to be the first sell-off. So maybe that big sell-off that I want right at the top might not happen anytime soon. We might still have to deal with this first, right? Markets need to do that. So that's my currently most recent trade idea that I would love to wait for. But yes, man, it's a big fight. And if you look on the daily time frame, it feels like that move that I just drew, the line has happened, right? Because the move that I just drew is markets running all the way to this area here, all right, to that weekly supply. But instead, markets created another bearish engulfing pattern, which I missed out on. I did not enter here. You know, when I was reviewing the markets, you know, when I was getting ready for the FOMC minutes, I realized I'd missed such a perfect entry. So I'm a little bit annoyed, you know. What we can do is maybe rely on some technical retail trading strategies. So maybe hopefully markets can make some type of double bottom and shoot up, right? And then hopefully make money there. So that's why this zone is color coded in weird, right? There are two high risk sell zones inside a risky, you know, red zone. But for me, this would be the place to try and wait since I'm already not inside this particular trade, right? So Euro Swiss franc, do consider, you know, doing something here and watching this area, right? But if markets decide to break structure, fall to the downside, then, you know, you can continually see price dropping without us if you're not in this trade like me, right? NZDUSD, the next chart number 6. Is it time to buy? I don't know. I don't think so. Right, so we wanted to buy, right? So we marked up the governing areas of values. So good thing we're coming back to this chart now, because it might be time to change our minds. Once again, you can see markets, you know, clearly use the whole month of August to do another bearish engulfment. But my goodness gracious, isn't this amazing? Isn't this nice? That price can open candlesticks here, but because of supply and demand, no matter what happens, a long wick is deployed, and you would know this because you're in it, right? Well, I hope you are, because we spoke about this, you know, several times in the war rooms, right? And now the question isn't, are we entering a sell? No, all these trades that I chose today were managing our positions. NZD USD, I'm closing this on Monday. USDJPY, I'm closing on Monday. Like, I really need, when I open trades, plan trades, I tell you guys, that's the point of the war rooms. When I'm getting out, I also need to be transparent enough to tell you, right? NZD US is from the 5th of June. All right, War Room number 70 on the 5th of June. The trade happened in August, but we mapped out these areas of values and pending orders in War Room 70. Trading journal, there, also on the channel, right? So please check that out. Now, I don't feel comfortable to buy. That's why this chart is in front of us. Normally, we would want to buy, right? But I'm looking at the dollar, and once again, I'm saying, depending on this type of week that we're about to have on the dollar, you know, if the dollar does break the supply, you know, then we're going to have a very strong dollar, and you know, fine, this chart will continue to fall. But if the dollar then starts to fall, you know, things will be different. So I understand that this is the COVID 2020, you know, demand, but I must warn you, most of these charts take their lead from Euro USD, who's always 3 or 4 months ahead, a financial and a half quarter ahead from most charts printing. Then pound USD follows. Then all the risk sensitive assets move, excuse me, in the same way. All right. So I suspect that over time we will fill this area and break it. And the fact that there's a bearish engulfing pattern after mitigating a bearish engulfing pattern coming from a bearish engulfing pattern is a sign for me not to be an idiot and do the wrong thing. So no buying from you on NZD USD. If the buying happens, just so you know, this would be it, right? Markets will be trying to equalize price there and then drop, right? So I will be exiting currently out of this position. Why? Because it's good money. It's really good money, and I don't want to ruin it, right? I can tell you what we're on right now. This guys, you know, you gotta tell people to come to this war rooms, because this is literally, I could create a private Telegram group just to sell signals, but because of how busy I get, that's one of the main reasons why I don't do it. It's just, for currencies, I'll do it for crypto, because I'm about to, let me not spoil the announcements, but for currencies just need patience. Needs patience and someone who's just level-headed, organized, right? You set a pending order, set and forget, and you hold, right? So this was our target area. We are almost, you know, at 1:3, but you know, we're literally at 1:2.7, 2.83. So, you know, one could anticipate that there's going to be action here, right? When markets make it down here, one could anticipate that. I would much more rather be interested in selling again than buying. in the event like Bitcoin, where we're like, yeah, this is the channel, Bitcoin is gonna go and then all of a sudden before it reaches there, boom, it drops. That's why we don't just buy. Just because we know where we want to sell, people always ask me, if we're gonna sell up there, why don't we buy to it? No, because you don't know the tricks and the manipulations that are gonna happen in between that journey. Because the buy is not a predetermined area. It's not in line with smart money concepts. If you think about it, because institutionally speaking, the governing time frame keeps printing supplies. If they keep printing supplies, then we might as well assume that there's a lot of sell pressure. We're about to hit a good, strong demand, but I don't want my money stuck there. So NZDUSD from War Room 70, I'm taking my 1:3, closing this on Monday, right? As soon as markets open on Monday, and then we'll talk about those cash results in another video, sure. For transparency, blah, blah, blah. But I won't be in a buy, and I'll be looking forward to timing the sales. So NZDUSD one more time, depending on where DXY is and all that kind of stuff, there is a potential one day in the future for me to come and sell here. All right, that's the signal. Once again, think about it. Think about what I'm doing. I show up every Sunday routine to look at the same 25 currency charts all the time. Sometimes I do 10, 15, 18. I tell you ahead of time because price is everything, and we can always cleanly, when we understand what smart money is doing, always on their side. So I'll tell you on the 5th of June, War Room 70, to sell NZDUSD here. I can't tell you when price is going to come. All I do is to tell you that all the rules have been met now for this area to be a safe place for a sell. And randomly on the 12th of August, markets will trigger. And you, because of your attention, the way you've been taught to trade, you are missing out on these opportunities if you're not organized. If you treat this war room as something that you can watch halfway through and then move on and you're bored, you're losing a lot of money on the table. And then when I come out with results, people will be like, how come it's always the mentors in life who make money, but people don't? It's you. Work on you, right? Become a better trader. Be organized. A trade in general. After you watch the war room, look at your capital. How many penny orders can you set without, what if Leroy is all wrong? You need to look at risking how much here, you have to really digest the business of trading, right? Let's move on because I've done a lot of teaching anyways. EURNZD. Why do I remember something funny about this chart? Oh yeah, all right, so I literally did nothing on this chart. There was this idea that maybe we sell up here. I didn't buy at the bottom, I'm just watching it, to be honest with you. It felt a little bit, paralyzing. Then I moved to Kinihashi candlesticks. I wasn't sure to sell here or not, so honestly, I did nothing. I really did nothing. But let's quickly pull up the Fibonacci. Swing low, swing high, right? And this is why, because, I prefer my order blocks to line up with my golden ratio, right? There's nothing wrong with markets lining up with that 50% area where, retail traders come in. So that's why this is already marked out as a potential sell point. But, I'm more excited about sitting up there. So for now, EURNZD, I'm really not in that market at the moment. But let's quickly do a top-down analysis. Let's quickly double check our bias, right? So the other thing I didn't like about this chart, the other funny thing was, and Kinihashi, right? This is not a clean engulfment, right? The red candle closes slightly below opens, red candle opens slightly below the close of the green candle. That's not an engulfment, right? But in normal candlesticks, it kind of like does a clean engulfment. So I would assume, even though I'm not excited about any type of buys, I would assume that maybe the month of September, because August candlestick looks almost done, and today is the 21st of August. So I'd assume maybe in August might get a nice green candle, right, trying to make its way here. And if that's the case, then that might be the trade idea. The trade idea is to really, look out for a sell, put a pending order sell here, number one. But this is also where there's break of structure. Remember where that 50% fib area was, where we said, potentially look to sell there, right? So I will have another pending order here, right? I'm putting an X and people will mean will think it means don't do it, right? I'm simply X marks the spot. But this will be a low risk area, which means I accept that it could go wrong. So I have a small lot size here and then a better lot size up there, right? Somewhere up in the zone. And then we shall see. But you can already see, right, in the last few days of August, price is already trying to make its way up there. So we might even get triggered this week and then be stopped out or not stopped out, right? That's EURNZD. I hope that was clear. It felt clear to me. EURCAD. We're now halfway through our list. So this is chart number 8. And I have 16 assets for you today. Still waiting, nothing to talk about. I'm doing nothing in that red zone. Even though the price is giving us potential continuation patterns to the downside, you remember, you know me, I never buy in zones outside of channels. I know price is trying to come down here. It'll be nice for markets to then, you know, meet me halfway and come to a valid area of value for me. Right, which originally, sorry, give me a second, originally was going to be here. So I wanted to sell here. Still waiting. This is chunk change for me, man. I mean, if you're a range trader, if you've got indicators, if you like support and resistance, then, you know, one of these is going to, you know, look at this. They literally always chow retail traders. And I'm never part of range in markets. I just don't get it. So I'll wait for a breakout, and if we get a breakout and there's a clean supply during the week, next week, this week, whenever, a clean supply to support that breakout, you know, then I'll sell. But if not, I'll just simply wait for price to get all the way up there, or I won't take the trade at all. All right, so I'm doing nothing as long as price in this red zone. Okay, but EuroCAD in general should be going down. All right, in general, the trajectory is down. Right, pound Swiss franc. Go with a close sell here, and then we just forgot about this chart. Is that what is happening here? We did. So we closed our sell point because why? We're not entirely sure whether this green area demand was going to hold, and we're not going to hold a sell into a demand, right? But you know, paying attention sometimes is very important. Even I clearly forgot about this chart for a while, because if you look very carefully, markets then went on to break that same demand here and continued going continued going down. And now, you know, we've missed out on all of this, which sucks, because you can imagine holding your sell all the way down there. That's good money, but it's fine. I'm going to just remove all these notes because then they just become useless to us, right? So we close this area, fine. Now, let's do a top-down analysis, then we can get back to mapping stuff out, right? So on the governing time frame, as markets broke, you know, its own, you know, debug, markets, to me, created a new supply somewhere there, like that, right? And now I would like to also investigate the trend line that I'm seeing. Oh, okay, all right, 2016. Right, so we've got a self-profile asset anyways. There should be no surprise there. So just like, remember we looked at Euro Swiss franc and I told you that the wick was filled and then markets closed below, right? Look at this. Pound Swiss franc, I'm telling you right now, it's going to be filled. Markets are going to go lower than this white line. And then it's going to be a waiting game, a long waiting game to get price to do something like that. And that's really where the money is going to be. To get into the buy, if you wanted to get into the buy for that, you're going to have to pay attention really to some changes in price on the smaller time frame, so you can be part of that movement, right? But this is the long-term perspective. I can't even recommend a buy given the fact that I just have a wick in front of me. Let's look at the weekly chart. Yep. Long wick there as well. Markets have already cleared the bodies. Markets are falling fast. Right, so on the weekly time frame, remember you want to wait here because it's governor. But on the weekly time frame, also just be very careful. I would also have a sell order here. And the reason why I've explained it, I'm going to explain it one more time. According to my trading journal, I've had 9 chances to make money and I've missed them because I'm so picky with my areas of value. There's nothing wrong with that. The only problem is in the event that in the future I need a lot of capital to hold future losses if they do come, I'm not maximizing on all opportunities being given to me in the market. So this is a nice place to be. Let's say a lot of retail traders load up their money here because they see a support and they push price up, then I would love to sell against everyone right there. Right, so pound Swiss franc, I'm definitely going to take a chance there and definitely going to have a pending order there. Right, so 2 areas to wait for price. And then CAD Swiss franc being our next chart, ladies and gentlemen. CAD Swiss franc being our next chart is here on the weekly. And this is more of a management trade, right? Because we know price is still going down, nothing has changed. And goodness gracious, I absolutely hate this pair. It was even choppy, even the long wicks. You know, when you're in a good position, you just keep getting multiple rejections. Absolutely annoying. Right, so if you're in it with me, please keep holding. But by now, surely you've broken even on long profits. If you haven't, put it above this recent PCP here. I repeat, put it above the recent PCP, but there's a high risk we'll get kicked out, right? Because markets are testing a bullish engulfing pattern and sitting on top of it. So this PCP is not a bearish PCP. Just look at where price is coming from now, right? So this is on the daily, right? So I'll put a PCP just above here, and then we see if we can get that, right? That's CAD Swiss franc. Nothing new to add. We're going to hold until we get all the way down here. And then the next time we want to start buying is down there. CAD is going to be weak because oil is weak. Remember, oil is now back to trading below $100 per barrel. When oil is flying, CAD is flying. When oil is dumping, CAD is dumping. Been through it on the channel many times, and now we can see it in front of our eyes, right? The correlation, right? So until we have that, and when inflation goes up, check the price of oil, the commodity price, because that's what the CPI is holding on to. Okay, but yeah, I don't want to get into some fundamental drama there. Right, pound AUD. I feel so tired. I feel like I really gave you guys a lot today, you know, and that's fine. Cowboy area, we spoke about it. I got out a while back. Sorry if I forgot to announce, right? Obviously down here was the obvious place to get out. Markets came back and then markets continued to the downside, right? So this cowboy area was an area that I doubted. I told you guys I doubt, risk little, blah, blah, blah. But some cowboy areas do very well. And it's actually the reason why I missed out on EURNZD or DXY demand, because those zones to me look like a cowboy area, right? They look like, dude, you know, markets are going to go for a higher supply, blah, blah, blah. But this was a nice ride. Because of how price is hanging right now, honestly, missed out on an entry, truth be told. We should have been trying to sell there. I was not paying attention during the week to this chart. So we are out of it. So we're going to have to come back here. Pound AUD. It's fine. Pound CAD. Someone commented on one of my videos, can I show you how I journal? I saw you, sir or ma'am. Sorry, I just don't remember who it was. I'll do a video around that. Done one before, but I'm happy to redo one. And maybe I'll even make my electronic journal public for everyone. But 365 traders should have a copy of a template to follow. All right, so let's see what we have cooking here. Let's go to the governing time frame. Yikes. Right, so all these risk-sensitive assets, euro and pound, right? It's an AUD. That's kind of like the theme of the day, but falling, keep falling. Dollar keeps still being strong. Markets are not yet showing the type of signs, unless if you're just looking at crypto and stocks, where you're seeing these rallies, right? Markets are not showing the signs of the full acceptance of the problems of the world are far behind us, right? So we've had a good break here, right? Markets have just been this type of trade you want to get into and you just hold. All my swings really hold until, you know, markets get to a demand or a supply, and now they have arrived, but I'm not trusting this demand. Why? We spoke about it a long time ago. When markets take time to sit on an order like this, an area of value, there's a lot of buying and selling. It affects the strength of the area of value, so be careful of that. It created a sweeping area just above that held onto for a while, but it broke that. Be careful of that. And our markets are back inside here, right? And there's no real close supply. This is what it looks like on the weekly. Let me just zoom in a bit for you guys. Right, and you know, it's literally been, you know, a while since April, since price came back to mitigate higher supplies. And then, you know, later on during the year, the trades that we took now in June, July, you know, the mitigation has been slightly better. But for the most part, this is like a do-nothing chart for me. No, not much serious confluence here, right? Burn somewhere up there. So it seems to me that I'm still going to have to wait for price to come all the way up here and potentially deal with this area there and leave this one alone. So these two areas for me on pound CAD are going to be key. Pound NZD. Oh, well, I don't know if this is where I got a stop loss hit now. I can't remember. When I do my results, I'll check my P&L. But it's not green, so I don't think I bought anything down here. Right, let's have a look at the chart objectively. Right, so yeah, okay, fine. It's this nonsense chart. Yeah, I'm doing nothing here. Sorry, not even interested. I can already tell I won't enjoy the ride. Right, markets are choppy. Markets, this is very nice imbalance, by the way. But you know, where will price? When will price take the time to come back to fill it? Right, so I'm not interested at all. I'm not even going to waste your time. I'm not interested in this market. Pound NZD, I'm just going to stay out of it for now. Still, NZDJPY, guys, come on, this has been good. You've been so good to us, right? It should remind you of CADJPY that we did earlier on today, right? Same situation, you know, sharp declines, massive explosions, sharp declines, massive explosions, sharp declines. You know, now we've got this consolidation area. And for those of you who are not in with us from the beginning, then you might want to take a risky entry somewhere in these levels. Remember, I drew this area for you, right? This was also perfect, right? And then we wait, right? So entry one still holding, entry two, this is what I want to close on NZDJPY. Remember when I started this war room, I said I'm going to talk to you guys about NZDJPY. I want to close it because this is no longer looking like something that's going to, you know, assist in a bull run. I understand there's glass effect here. Don't get me wrong, students, 365 students. I know what you're seeing. I agree with you that this area could be weak and could break, but I don't know if this is going to happen, right? So what I want to do is close this on Monday, right? So the little distance I have left, keep those profits. I also want to close this buy here, all the way down there, fundamentally, and then open a new buy here, right? So a new buy there. So one new buy, but low risk in the event that markets do bounce through here and then come back up there again. So I'm going to have a low risk buy right there. And then the ultimate swing trade from down here, I'm not going to touch. These are last year's order flows and this year's tags in January all the way in there. These ones, I'm fine because, you know, I've locked profits somewhere there. I'm just going to hold them. But just to be clear one more time, I'm not buying down here anymore. I want to close this on Monday, midnight when the markets open. I'm going to close this area because my feeling is this price is just going to come all the way back down. I'm hoping that price comes all the way back down and breaks this area and then comes to a retest there. Here by the retest, I'm going to have small risks, right? Small risk here to hopefully go back up. So I'm setting another pending order here after I close 1, 2 trades on NZDJPY. All right, so that's been good money, but we had to be very patient for it. And the last chart, or last thing we said we're going to speak about, which we already did, my people, is the dollar, right? So thank you so much for watching. I've shown you guys the dollar. What I will do this week is I did make promises last week and I fulfilled some of them, right? I did the Euro USD analysis. This week I'm going to try and pump out EURJPY scenario analysis, Pound JPY scenario analysis. Every single day, Monday to Friday, I'll be doing my podcast reading. In fact, episodes for Monday and Tuesday have already been recorded, and there will be 6:30 a.m. on Monday, 6:30 a.m. on Tuesday. Podcast chapters will be in. Guys, this book is doing wonders. You know, if you're listening carefully, if you're following, you know, the amazing stuff here, you know, you're getting your mind right, and you should be fine. So check out the podcast. Last announcement, it is closer and closer to the final week of August. Yo, if you watch to the end of this video, you hear this last announcement, please let me know that you're here. I am worried, and I'm saving this for, you know, true disciplined people who stick through towards the end of the videos. I'm worried about this. No one else seems to be worried about this. And it's reasons outside of inflation, recession, deflation, stagflation, you know, I think the end of August, we're going to see some fun drama. We might come down here. There'll be a catalyst in the next few days, and that's what my next video is going to be about. I keep telling you this video is coming. I want to drop it right at the timely moment. I'll give you guys enough time to prepare for it. I'm still watching to make sure that I'm not crazy, right? If I'm wrong, nothing happens. Dollar cost average to invest. But if I'm right, all that cash we've been saving now will allow us to buy Bitcoin at an even lower price. There might be a big catalyst happening towards the end of August. I keep hinting this in my videos. Those of you who are paying attention, please let me know that you made it to the end of the video and you're actually hearing this. Because this week, why I think crypto might fall to 10,000, 12,000 in August is dropping sometime this week. Monday, Tuesday, Wednesday, we'll see when to drop it. And it's got nothing to do with all the information I keep feeding you. It's going to be based on new information, stuff that a lot of people I don't think are even remotely aware of. And I hope to share some thoughts, not to start panic, but to share some critical thoughts and to at least tell you how I'm going to move about it, right? 365, shake my hand. Thank you so much for watching. Subscribe. Tell someone else to subscribe and tell them to tell that other person to like, share, and subscribe. I appreciate you, and I'll see you in the next video. Peace. Have a good day, everybody.